Let us start the question of policy, monetary policy.
Yeah.
In hindsight, was the hike in December a mistake?
Well, Richard, I don't think so. 2018, the economy grew around 3%, unemployment rate near a 50-year low, inflation very close to our objective of 2%. So it made sense to normalize policy in 2018, and I have absolutely no thoughts that otherwise right now.
Right, except the sharp U-turn, the handbrake turn in policy statements from December through to January was pretty exceptional.
Well, I really don't think so. If you actually go, as I'm sure you have, go back and look at the transcript of that press conference and what we've said, I really don't think it's a U-turn. What we said going into 2019 is that we were looking at global developments. We were looking at adjustments in financial markets, and that was also something we emphasized at our January meeting. I think policy right now is in a good place, and we've emphasized that.
Where is policy? Is it wait and see? I will save you the breath of data dependent.
Okay.
I realize everything is data dependent, but where is policy now?
Well, right, Richard, we think policy right now is in a very good place, and that's appropriate because the U.S. economy is in a very good place. We can afford to be patient, and we can afford to let the data come in and tell us a little bit about where the global economy is going, but we think policy is in a good place right now.
By patient,
Right.
I'm trying not to parse words, but what do you mean by that?
What I mean by patient is that we have done a lot of normalization in policy over the past 3 years. We're very close to our mandate objectives of full employment and price stability. And with that set of initial conditions, we can afford, without any presumption about timing, to look at the data come in and tell us what the next adjustment in policy might be.
So when the market looks and the dot plot suggests and everybody thinks one more move this year, does that seem reasonable?
Well, there are certainly scenarios where that would be appropriate. There are other scenarios where we might not hike at all. It really is going to depend on how the data comes in. Let me talk a little bit about the dots. The dots give information about how individual participants, all 17, individually look at different scenarios for the outlook. But we don't vote on the dots. The dots are not a policy decision. They're one input into a process. So I wouldn't read too much into those dots right now.
What about then on the slowdown that is happening?
Yeah.
Of all the factors pushing this slowdown, which are you most concerned about?
Well, so far we have to admit, Richard, that we don't have all the data we usually do right now. So it's not even clear how much of a slowdown, if any, that we're seeing in the economy. The data, of course, was delayed by the government shutdown. Obviously there's a range of indicators that we look at. The labor market data is still strong. We've had some softer retail numbers. So we're just putting that together right now.
You've got China's slowdown.
Yeah.
You've got Brexit.
Yes.
You've got the trade war. Which of those three concerns you the most?
I think broadly, because China is such a big part of the global economy, obviously, a sharp slowdown in China, which we don't foresee, but if it were to happen, that would have consequences for all the economies in the world, including the U.S. Brexit, with all due respect, is primarily a big impact on the UK economy, a huge impact of the UK economy. We're very attentive to making sure that were a hard Brexit to happen, that the global financial system and the plumbing would continue to function, and we're confident of that. But we don't see Brexit as being a big systemic risk for the U.S.
And China and the trade talks, the trade war.
It's not yet a trade war.
We can discuss.
No. Oh, yes, of course. No, there are obviously very important ongoing discussions between the U.S. and China on trade. That is the most important trading relationship in the world. Obviously there are different scenarios for that. So far, that's not had a big impact on the economy.
The Fed's balance sheet.
Yes, sir.
It is esoteric into the realms of economic books, but now it's in the news.
It is.
The idea that you may stop running down the balance sheet because of the higher levels of reserves. Are you going to?
Well, what we announced at our January meeting, Richard, is that we've made an important decision at that meeting, which is we're going to formally adopt and embrace the operating framework we have which requires that we have ample reserves in the banking system. Now that we've made that decision, in coming meetings we can make important other decisions, such as when to bring the process of shrinking the balance sheet to the end and the pace at which to do that. We've not yet made that decision, but we will be discussing that in future meetings.
Are you close, do you think, in your view, not in the committee's view, in your view, are you close to the point where if you're going for abundant reserves policy, it's best to let it now settle?
Well, let me put it this way. There are a number of estimates by outside observers that to run an ample reserve system will require reserves somewhere in the neighborhood of $1 trillion to $1.2 trillion with a buffer. And under the current pace of normalization, we would get to that level sometime later this year, early next year. So I'll just leave it at that.
The subject of communication.
Yes, sir.
How the Fed communicates.
Right.
The statement, the minutes, interviews like this. Yeah. You're in charge now. You've been asked to look at the whole question of communication.
Yes. Mm-hmm.
How are you going to do it?
Well, we have a subcommittee to do that. Ultimately, that will be a decision by the full committee. We're beginning those conversations now. There are various elements to communication. Obviously, the statements that we issue after every meeting. Chair Powell is now doing 8 press conferences a year. So we have a number of avenues to communicate, and we're looking at the way that those could be refined and work together.
Can I just read you?
Oh, wow.
From the Fed transcripts of 2003, one of your predecessors, Vice Chairman McDonough, talking about the press statement. Wow. The idea is to have the possibility, but not the certainty of a move. Otherwise, the market will be waiting every morning for us to have a meeting. Nothing's changed.
So, the old saying, the more things change, the more they stay the same. The very, very prescient comment from Bill McDonough there.
But he's right. I mean, what can you do? Because if you say to me, we're thinking of moving, I'll say to you, when? If you say, oh, maybe next week, are you sure Monday, Tuesday, or Wednesday?
Right. And of course, and I think what you're pointing to here is the fact that we want to be transparent. We want to convey to the public the way that we're thinking. The reality, though, Richard, is that at different points in the economic cycle, there are different amounts of information that you can provide. And I think that what we want to recognize is that there's not a one-size-fits-all model for Fed communication.
You had a dinner with the president along with the chair.
I did.
Did he put pressure in the sense?
Well, what I will say about this is it was an enjoyable dinner. We basically talked about the economic outlook and the global outlook. We didn't really get into monetary policy beyond what the chair had said in the January statement.
Your immediate predecessor, Stan Fisher, said on the same program that you use to be on Crespi's Business, and he said that you never really know if pressure's being effective, because you're never really sure whether there's someone in the meeting hasn't been in any way affected by a strong statement from he is, after all, the president.
Well, let me just say this very clearly and without any equivocation. We have a very simple mandate given to us by the Congress. It's a dual mandate. Our job is to use our tools to achieve maximum employment and price stability. That is the only thing that motivates me and my colleagues. We have a process here. It's not just us. We have Reserve Bank presidents, and I can tell you, I don't feel the pressure. The only pressure I feel is to do the best job we can to keep the economy at full employment and price stability.
Finally, coming back to this question, if you were sitting on the set with me all those months ago in your previous life.
Oh, yeah.
Up
in Columbus Circle.
Absolutely.
Yeah, lovely part of the city.
I would have asked you, Mr. Clarida, should the Fed move? Is it time for the Fed to move? Is the Fed policy right? Well, that was then.
Yeah.
If I now ask you the same question, should the Fed move? Is the policy right? Would your answer be that much different?
What I'm saying to you right now in February of 2019 is I think monetary policy is in a very good place. The economy's in a good place. It's appropriate now, and we can afford to be patient to decide on the next adjustment. And that's, I think, what I would say on your set.
We'll never know.
Well, I wouldn't say we, I would say they.
They. Which brings me neatly to the we, from the they to the we.
Yeah.
As somebody who has spent their entire professional career, even though you've been in government and you've been in administration, but analysing what this building does.
Yeah.
How different was it going from they to we?
Here's the way I would put it. As an academic and a Fed watcher, I had the luxury of just focusing on one piece, an important piece of what the Fed does, which is to decide to move interest rates up or down. Once you get inside the building, you realize the complexity and the interaction among many things the Fed does. It has a big role in financial regulation supervision. It has a big role, if you will, in the plumbing of the financial system. And what I realized is that all of these interact and impinge on one another. And I had not appreciated that before I got in the building.
And the first time you sit in the boardroom and cast a vote. Come on. This is something that you have written about, studied, commentated on, and now certainly, I'm not sure whether it's gamekeeper turned poacher or poacher turned gamekeeper. I don't know which is appropriate.
Well, it was, you know, it was a very humbling and exciting moment. Absolutely, it's something I take very seriously, and it's an honor and a privilege to have been selected and to be able to do this. So I don't take it for granted any day.
Vice Chair, thank you.
Thank you.